Hello, everybody. My name is Joey from the Chart Guys, here to check in on the markets. We had a crazy day out there with the FOMC. Bulls got their no hike, but Bears won the day as we sold off strong into the close. Going to take a look at what was different today that we haven't seen in a while and look to see where things stand. So let's get on into it with the S&P 500. We had one of our biggest red days here since the top back here at the beginning of June, and there was a notable difference out there today. We were not seeing the same tick for tat rotation that we've been seeing between the financial sector, healthcare sector, and tech and semiconductors. So we had all sectors going down today. Now, of course, tech and semiconductors are very weak, consolidating on the monthly. We've got financials and healthcare coming off of all-time highs, but they were all consolidating at the same time. And that's what led to SPY being able to put in a pretty solid red day. And at this point, we are breaking our tightening range to the downside. We've got a little bit of discrepancy on the S&P 500 right now because SPY itself had that crazy wick. So we can't really use those levels as accurately. And then you've got SPX actually still holding its support by a skosh. And the futures charts, whether you're using the adjusted or unadjusted, that gives you two different pictures as well. So, kind of be referencing these other charts. Anytime you have a situation like that, you'll just need to see all charts fully break their levels to trust the move with full confidence. But that being said, bears are out and about, and they're trying to get monthly consolidation underway in the S&P 500 to join the tech sector and the semiconductor sector. So we've got a lot of room for hourly lower highs on many, many names tomorrow. So we're getting pretty crushed in the short term. Won't be surprising to see an hourly bounce. Anything below the FOMC high reaction going to be an hourly lower high, and bulls going to need to regain an hourly uptrend to try to shift any momentum back in their favor. Now, what the broad market wants to see is for tech and semiconductors to bounce from daily oversold conditions. So, moving on here right away to the NASDAQ, certainly coming unglued here a little bit. And if we look at our RSI projection tool, we are creeping into daily oversold conditions. So 26,960 on NQ. If we go to QQQ here to get that level, similar distance away, looking at 651.55, and that would be the strongest look for bulls. Daily oversold, marking a monthly higher low, is the strongest look for bulls. If we look back at what happened down here at the beginning of the Iran war, that is what marked our monthly higher low. So if that happens, then bigger picture, this monthly consolidation is healthy. If we're to lose that daily oversold level, then the next things we are looking at are monthly 12 EMA and then previous all-time high. So those are roughly in the same zone in the mid 630s, and that'll be the next area of interest. So given the context of everything that's going on, liquidations happening over in South Korea, dragging down semiconductors, knowing that much of the market is over leveraged, you certainly don't want to just be scaling into this or anything, in my opinion. I would be taking a reactive approach or taking shots on smaller time frames with a defined stop and chop in half, seeing if something can stick. And that's if you are a bounce player, daily oversold bounce player. I like playing bounces, but I'm not getting aggressive into this dump at this point. If we are to get very extreme, then I will get aggressive. But the bottom line is when we look at the NASDAQ here, bears have just been walking it down. We had decently oversold conditions on the 17th of July, but since then we've just been dinking off a 4 hour oversold and climbing climbing downwards, falling downwards, and same with hourly oversold, not really getting too torqued. So if we were to get hourly in the teens, 4 hour in the teens, daily oversold, essentially a proper super stack, then I could be interested in more aggressive bounce attempts. But I just I'm a bit of a different trader than I used to be. I used to really love to get right in there on the front side of it. But if we bounce, I'll get in. I'll just wait for bulls to prove something, and then I'll buy a higher low after. It takes the whole guessing game and the battle of playing a bounce out of the picture. You just wait for bulls to prove something. Once they prove it, you say, "Oh, great, they're winning again. Now they get back in with the winning team." So that's going to be my approach. I know some other people are kind of licking their chops to try to take a crack at daily oversold conditions, but uh, that's not me. So, and to be clear, again, I am interested, but I'll be on the right side of the V. I'm not interested in the left side of the V. So, on this note, let's take a look at the Kospi, because that is having a big impact on what's going on in the US markets because of its tie to semiconductors. So, certainly a bit of capitulatory action there today. So, we'll see what it does tonight. The NASDAQ is much lower than it was when the Kospi closed. So, just a hourly bounce at this point, hourly 12 EMA rider, and it's going to be the zoom out game. Got to get over hourly 12 EMA, then 4 hour, and then we're just a daily 12 EMA rider. So lots and lots of pain in South Korea right now, and you hate to see people getting wrecked. And when you do, you just got to take it as a lesson for yourself to make sure that you don't get yourself into that type of position. Lots of people borrowing money from banks and then leveraging it out. So it's kind of a F around and find out type situation. And unfortunately, a lot of like innocent people that ultimately just succumb to this nationwide FOMO. People who weren't even really traders see everybody else making all this money and they say, "Oh, I'm going to go get a loan and I'm going to do this because I'm tired of getting left out." And those are the ones holding the bag from the top. So you truly hate to see it. But we're in an area of interest on the Kospi. It's a daily back burner. You got monthly 12 EMA here. You've got this previous volume structure. You can't see it on the index, but if you go chart the ETF, you can get a good look at it. So there's location here, but burden of proof is on bulls. If the Kospi puts a bottom in, then I anticipate the NASDAQ and SMH and SNDK and MU and the whole gang are going to put a bottom in. So it's an important time to be watching international markets. So let's move on back to SMH. Coming unglued, close at low of day. Volume pretty stout here, but not huge, to be honest. We had pretty big volume on Monday, but then we dropped back off again. So watching for daily oversold conditions. It's certainly creeping on in. We've got them at 480.96. If those fail, then we're looking down to monthly 12 EMA, pretty much the same archetype as QQQ. Daily stair step on the way down. Hourly, not quite a 12 EMA rider, but lots of room for an hourly lower high next bounce. And that is that. So looking at the Russell, just wiggling on down at this point. Bears definitely poured it on into the end of the day, and we're at this spot where the Russell Bulls need to show up if they want to hold weekly 12 EMA. If they do not, they're going to take a step towards monthly consolidation. We got the month finishing up here soon. Friday will be the last day of trading, so we've got 2 trading days left, and then if the lows of this monthly candle are broken on the next monthly candle, then that's monthly consolidation. We'll be looking to monthly 12 EMA. Let's see. I kind of skipped past what I was looking to talk about earlier. I spoke about it briefly, but the lack of rotation leading to the SPY big red day. We have XLF consolidating. You have XLV consolidating. You have MAGs consolidating. Of course, you've got SMH and QQQ pulling back as well. The only real green spot of anything that has somewhat a decent weight was IGV. Some pretty nice days out in software land. But largely everybody who matters was going down, and that's why SPY saw a pretty solid down day. So looking at XLF, that being said, it's just daily consolidation off of all-time highs. So not gonna worry about XLF unless we confirm a daily downtrend. So we've maintained a daily uptrend since this EMA saver, the daily downtrend into the 12 EMA that held and then reconfirmed the uptrend. And we've been in one ever since here. So if we lose daily 12 EMA, that'll be bears opening up the door to try again, like back here. Of course, bulls V-shaped it, but let's see, if we lose the 12 EMA, we could have a potential head and shoulders shaping up, something like that. And if we continue to lack follow through on higher highs, then we'll be watching the rising wedge psychology. It doesn't really paint as a wedge, but bulls are in control here for now, and tough to be looking bearish up at all-time highs. If we were to have weekly consolidation come into XLF, weekly consolidation come into XLV without semiconductors bottoming, then that's when the S&P 500 could get pretty nasty in the intermediate term. So I think the most likely scenario would be we get a bottom in semiconductors and the NASDAQ, and then that leads to a temporary top in XLF and XLV. I think that's the most likely, just changing of the guard, same as we saw and the shift to financials and XLV. That was when semiconductors stopped. Remember now, we were watching SMH I talked about it in the videos thoroughly, that once we lose this 2-day 12 EMA ratio, or 2-day 12 EMA on the ratio, then that's a character shift in the space, and we have to respect that. I was talking about it in these videos, talking about it on Twitter here back from July 2nd, noting that that was a crucial day. If we had relative weakness, the ratio was going to lose the status quo. And then the follow-up, the ratio lost the status quo. There is a shift underway for semiconductors in memory, and a shift it has been. Everything has come unglued since then. You got some names down 50%, like SNDK, others in the 30s, like MU. So you got to take what the charts are giving you, not what you want from the charts. And when you have moves that go parabolic and then the top is in, then it's good to be patient and let bears have their run with it. Let them do their thing and wait for signs of bulls to come on back. So I used to have or still do have a joke with Devin, my trading partner, and the joke is we say, oh, top's in, I'm in. And it's sarcastic because we used to truly do that back in crypto, and did it in the broad market as well, where you just watch something run up forever, not do anything, and say you're waiting for a pullback, and then you get the pullback, and then you feel like that's the time to buy because it's properly pulling back, but really you're just buying into the first bearish signal that you've had in months. It just doesn't make sense. So that's why we get a good laugh out of it now. But a lot of people having difficulty with these names, and it's just like, you can get your monthly higher lows in semiconductors. Just wait for bulls to prove something. When we see a daily uptrend, or when we see this 2-day uptrend reconfirmed on the ratio, then there will be reason to be looking at these semiconductors. Or if we get capitulation, there's two sides of it. You either need to totally come unglued and capitulate and wash out leverage and reset the tape, or you need to build a base and have some constructive price action going. And just to look at SMH, you don't have to hit the bottom to get a position on something like this. You can let bulls see a bounce like that and then try a higher low and buy up here. That's one way it could play out. Say we hit daily oversold and then we V-shape out of there, set up an inverse head and shoulders. Or you can come on down and do this and peter around and maybe wedgie or whatever. Wait for something. Wait for something. If you want to be the most aggressive, then even then get on the backside of a smaller time frame move, unless of course we're capitulating, and then That's a different playbook. But at this point, we're not there. It's starting to get closer with how today played out, but you're going to need some form of super stack. So if you're not following me on Twitter, you should follow me on Twitter, junglefunk_. Lots of good stuff all the time. All right, so talked about SMH, talked about the Russell, talked about Kospi. Let's look at XLV. So similar to XLF, just pulling back a little bit off all-time highs. So going to be looking for a daily high or low. No daily consolidation underway yet. Holding on by 2 pennies and lots of room for a higher low. And unless bears confirm a downtrend, then they're not going anywhere. They had a chance here, tried. Bulls held the double bottom, said, nope, you're not seeing deeper weekly consolidation. And it just ended up being a bull flag. So broad market bulls want to see some degree of rotation. If we continue to see everything sell off together, then that's when we're going to have some sharper pullbacks. All right, looking at IGV. So IGV bears unable to confirm the weekly downtrend, see monthly consolidation follow through, and now let's view this as like a 2-day tightening range, high, low, and I'd anticipate a lower high compared to 95.58. And that's about that. Let's see, XBI probably getting close to weekly 12 EMA. So looking for a weekly higher low. I like the 2-week 12 EMA better on XBI. So if we get down there, around 140 is probably what it would be at the time, 139. That's an area of high interest, but more aggressive bulls are looking at the weekly 12 EMA. And just wiggling on down here, not a lot going on. This is kind of that scenario I just drew out on SMH, and it's like, yeah, if bulls break some daily lower highs, then you can say, okay, I'm gonna take a crack at XBI. So mags still just hanging down at the lows after the Google earnings, and or were these the Google earnings? Is that right? Maybe Google and Tesla same day. Yeah. So, yeah, mag's still just chilling at the lows. And we got more earnings today. We have Microsoft. Let's check back in on these reactions. So Microsoft, nothing burger, and then Meta, quite bearish. So, yeah, Meta nearing nearing the 2026 lows. And if we get beyond that, then not too far from multi-year lows. That's not right. That's not right. We're not talking multi-year lows yet. We would need to take out the April bottom from 2025 to really be talking about that. But anyways, mags then surely setting to gap down. And what is that? That's the potential. Let's see. Is that a weekly downtrend confirmed here? Yeah, no, we're coming into that support. So if we see another red day tomorrow, potential weekly downtrend confirming on mags. We've got the 30-year government bond yield pushing to new highs here. What the broad market hopes for is that these higher highs that lack follow through can continue to do such. So this is providing a headwind for the markets. Oh, that's not where I wanted that. Yeah, something like that. Bears would need to show up on the yield tomorrow for that to be the case. But if this could top around here and QQQ and SMH and Kospi can bounce from daily oversold conditions, you can kind of see the pathway for some intermediate term reprieve. But lots needs to happen for that to be the case. So continuing through stocks, NVDA, weekly downtrend, or we're already in a weekly downtrend. Double top up here and going for continuation, just a few pennies away. Google is doing well. It's a little spot of green in the markets after getting smoked on its earnings. Daily stair step up, going to need a daily trend change if we're going to take a step towards a monthly higher low off the 12 EMA on a monthly 12 EMA rider. So that's a little positive spot in tech. Tesla just getting leathered. So daily stair step, it'll bounce at some point, but this is a big old rising wedge that I've been talking about for a while in the chart, guys, and it's busted. So not a good look for Tesla, just staying in balance, and it's weak. And until the ratio chart starts to show something, then there's nothing going on for Tesla. SPCX also smoked. I'll continue to talk about SPCX because I want to keep my eyes on it, but I want to be clear that I don't have interest in buying this thing down at the lows. It's a black dirt breakdown, overvalued company. So, yeah. Looking through semiconductors, INTC certainly smoked, daily oversold, coming into play, lost monthly 12 EMA, not a good look, structural shift. These previous highs, if we were to continue dumping in the 68 area, those would be of interest, but that's another really solid leg down. SNDK, oh, that's the 2-week 12 EMA that we're looking at, not the monthly. Hold on. Yeah, monthly 12 EMA is still far away. That's actually, so we got monthly 12 EMA and previous all-time high together. So, oh, no, that's not previous all-time high. We have the tech bubble all-time high before that. So that's around 75, and then we've got the 68 one. So, SNDK, monthly 12 EMA coming into play if we see another solid leg down. We are nearing daily oversold. Same story for pretty much everybody at this point. The only real semiconductor that's telling a different story is AMD, and that was the laggard bear. It was holding on better, and then now it's coming off of the top. It did end up being the laggard bear. LRCX smoked. AVGO also is doing its own thing. It paid what it owed on those earnings, so still balancing on monthly 12 EMA. If we can get a bottom in the sector, then AVGO probably a good candidate for a bounce. If you want to get some semiconductor exposure, but you don't want to step in front of the train and take the difficult oversold bounce trade, bottom fishing on AVGO, pretty reasonable look there. So who else we got? KLAC smoked. Everybody's just smoked. So tomorrow, if we bounce, looking for an hourly lower high. Got to regain an hourly uptrend to shift anything, and then got to break a daily stair step to shift anything. So either right side of the V, wait for bulls to prove something, or hope for bears to just absolutely crush it until we hit some historic RSI levels, some full-blown super stacks, something like that. And then you can go for it on the left side of the V. Anything else is a questionable use of bandwidth. The bandwidth to reward ratio of bottom hunting is just not good. There's no other way to put it. All right, what else we got? Let's go to metals. So metals, that's a contract rollover on gold. Metals holding on pretty well, all things considered. When you look at what the broad market is doing, and you know what that's from, that is from the gold silver rate, or the gold ES ratio. That was the reason for my renewed interest in metals. This getting over a daily 12 EMA triggered me into paying attention to metals, and now here we are. The whole market's coming unglued, and metals weren't immune to the downside. But when you look at what the rest of the market did, and then when you look at what gold and silver did today, kind of be like, okay, not so shabby in the scheme of things. That being said, still just got to get over 2-day 12 EMA. The thesis for the falling wedge for a quarterly higher low, it's not doing anything right now. You got to get through 2-day 12 EMA and confirm a 2-day uptrend from here if this is going to be go time from here. If we go to new lows and still hold the wedge, that could all play out for a while before we actually get a bottom. So just going one step at a time. Silver, similar deal here. Held on pretty well, all things considered. You had a little daily downtrend confirmed, no follow through, but I'm not really too concerned with the daily at this point. I feel like there's better clarity on the 2-day with the 2-day 12 EMA rider. Got to get up and over for a shift there. So GDX, Also, can't really complain. Certainly saw a nice pop on the initial FOMC reaction, but gave a lot back with the rest of the market here. And same deal, you got to get over this 2-day 12 EMA if we're talking about this falling wedge. So metals were looking kind of ugly a couple days ago, but they've showed some relative strength the last 2 days, and we'll take it. All right, looking at oil. So oil, daily stair-step bull break, bounce underway. Anything below 93.50 going to be a daily lower high. And the question is, are bears going to be able to confirm a daily downtrend, see deeper weekly consolidation where we then look for a weekly higher low? We had our weekly tightening range here. Are we going to get something similar down here? That's not a good tightening range drawing, but you get the picture. Time will tell. We got to see when this daily bounce tops. If it bounced here or if it tops here, bears have a chance for a daily downtrend. If we go further up, then we'll be looking for a daily EQ. So one step at a time there. Got a clear 4-hour uptrend guide. Room for a 4-hour higher low on consolidation. Bitcoin weekly lower high is set. Bulls, hopes, and dreams is some type of inverse head and shoulders here. And the big question to me is going to be, are we going to reject from the weekly 12 EMA on the Bitcoin NASDAQ ratio? We're testing it now. We've been a weekly 12 EMA rider for months and months at this point. If we reject, then that lovely relative strength that we've seen in Bitcoin for the last month is going to disappear, and it's going to go back to being in the doghouse. So I use the quotes by saying lovely just because it's not lovely. Bitcoin's a dog and has been a dog, and bulls have proved nothing. So when you're in a downtrend, you're going to have bounces along the way. And that's what this is. Very open to it being something else. So we have this falling wedge. If bulls can confirm a weekly uptrend, then we'll say, oh, that's something we haven't seen in a while. I mean, we saw it back here, but then we rejected from previous support as resistance, and it was just really everything bears wanted to see. It ended up being a perfect bear loading spot on the double top on the SPY or the Bitcoin SPY ratio. So open to it, but bulls got to prove it. And right now they're just not proving it. And this bounce, it's like you got relative strength because the NASDAQ is straight up going down. But this is like the weakest, most corrective looking move for Bitcoin that you can see, really. So we'll go one step at a time. Ethereum, you got your daily 12 EMA rider. I believe it's now being lost. So, oh no, bulls held it back up. So that's the guide on Ethereum. If that's lost, and we'll get weekly consolidation underway here too. And I think that's it. I think that's all I've got to talk about. Just a general note, when the market tells you who it is, you got to listen. You cannot fight the market. There's a lot of people out here fighting the market, and that's why they're not having a good time. If you fight the market, you will lose. You might come out with a couple wins here and there, but in general, if you want to be successful in this game, you need to just take what the market's giving you, not what you want from the markets. When the market says, hey, it's time to pump the brakes and cool off and de-risk and lock in profits or whatever, then you got to listen to those messages from the market. We were very on top of this top in the chart guys, in these videos, in the community, on Twitter, everywhere, talking about the science, talking about this has changed, talking about that has changed. So for folks that are feeling the pain, I certainly feel for you. We've all been there. I've had the reason I joined the chart guys was because I was on a 50% net worth drawdown in 2018. I said, I got to figure out what the heck I'm doing. So I've been there. I feel it. I've felt it, and I feel for you right now. But what you need to do is take the lessons that this market is giving you. Like, this is, you're paying tuition right now, and go back through, look at what you could have done differently. I've got a tweet on my page from the day of all-time highs talking about, like, look for these things to let you know that a shift is underway. And I didn't know that that post was going to mark all-time highs, but it ended up doing so. Go find that, look back through your charts, see what you could have done differently. Go back through, watch these videos, see what you could have done differently, and then take your lesson, take your notes, and then move on. So, got to protect always. If you're using leverage, you certainly got to be careful. People are ruining their lives over in Korea right now with leverage. If you just in common shares and you bought the very top tick of the Kospi, you're not having a good time, but you'll live to trade another day. All these other people, 5x leverage, just blowing up, uh, being homeless and stuff. It's awful. So you got to make sure you're not crazy with it. And again, just taking what the market's giving you, not what you want from the markets. Because when you just take what the market's giving you, now's the time where you can be excited about names that you wanted to buy. They're starting to come down into some buy zones and stuff like that. And that's one of the great things about the swing report, is it frames that mindset of, essentially, Lamont puts these names on here, and sometimes they don't come into play for 2 months because he finds a name that had clear relative strength, and then he finds a good buy zone for it. And this just ends up being your shopping list. So this is the dashboard from the swing report. These are old picks back from the winter. But there's a waiting list, or a shopping list sitting here. And for traders that are not getting smoked on the way down, they're the ones that get to do the shopping. For traders that are getting smoked, they end up having to manage risk and sell low and all of this stuff. So you just want to stay on top of things in the market. So if you're looking for your own grocery list of names curated for you, check out the swing report on chartguys.com. Let's see, one more thing. I'm going to be doing an AMA in August. Don't have the exact date pinned down yet, but pretty excited for that. So I'll share details on that as they come in. And I think that's about it. We'll see what tomorrow brings, watching daily oversold conditions, monthly 12 EMAs, and then previous all-time highs. That's what we're looking at. Are we going to see our yin and yang rotation come back with XLF, XLV, SMH, and QQQ, or are we going to see continued unified downside? Is the S&P 500 going to follow through, break the weekly EQ bearish to start monthly consolidation? Is the Kospi going to hold monthly 12 EMA, daily oversold conditions, that volume node? Is the 30-year yield going to lack follow through on higher highs like it has on all of its recent bull breaks? And that's that. Those are the things I'm watching. Can metals get over 2-day 12 EMAs, confirm 2-day uptrends? All right. Thank you for tuning in. I will catch you all next week. Take care.